Thank you, Nicholas. I'm a partner at Watson, Farley and Williams, based in London, doing asset finance in the shipping industry, and I've been in Maritime for 23 years. But I have to say I'm probably a snotty little teenager in comparison to these three gentlemen on my right, so I actually have quite an easy task to introduce them. Given the amount of years they have in the industry, I think you probably have all seen them in one guise or another across the years in conferences and in industry. But I would just say I'm very pleased indeed to be able to introduce these three to you and to appear on the panel with them. I'll say first that against the background of the strategy and vision published by the IMO in 2018 on reductions in greenhouse gas emissions by 50% from their levels of 2008 in the year 2050, we're obviously seeing a lot of press coverage and increasing focus on this area, not least from the amount of materials I've had to look at to ask the questions and put them to the panelists today. And those sorts of reductions are coming from a really disparate range of solutions, whether they be from a whole mass of different technological solutions or from theories and practice in new fuel and new developments to come. But against that background, I'm really pleased to say that for the topic of decarbonisation target challenges and strategies, we have the viewpoints of three very different industry players this afternoon. So on my right, and obviously all on my right, immediately on my right, we have Michael Parker giving the perspective of the banker and the bank's position in this arena. Next to him in the middle, Martin Stopford, who you all know as the economist and analyst in the shipping industry. And on the far end, not for any particular reason, Grahaeme Henderson in his position and from the perspective of the owner and the operator in his role at Shell. So I put on the names of the speakers as Dr. Grahaeme Henderson, Vice President, Shipping and Maritime, Shell International Trading and Shipping, Mr. Michael Parker, Chairman, Global Shipping, Logistics and Offshore, and Chairman, Corporate Banking, EMEA. And I think you're also wearing your hat of being the chair of the advisory committee on the Poseidon Principles today, and Dr. Martin Stopford, non-executive president, Clarkson Research Services Limited. I was told not to ask any flat earth questions in this afternoon session. I won't say who asked me to do that, but I will say that we've limited the questions on this to four key areas. One is a crystal ball forecast, and the other are more practical issues arising in this arena. So I'm going to start with you, Grahaeme, at the end, with the first question, which is, given that we're 31 years off that date of 2050, do you think there are likely to be pressures to change the figure of 50% as a reduction margin?
Thank you. Thank you, Pat. Well, what we're seeing at the moment is a lot of ambitions being set by groups and by countries. I mean, for example, here in the UK, there's an ambition being set of net zero carbon dioxide emissions by 2050. The IMO figure is 50% reduction, and that may require change to align with some of these other growth objectives and also societal expectations. We also do know that shipping will grow, but by how much? So there have been various predictions made, some at a rate of 50%, some as much as 250%. And there'll be changing requirements for shipping in the future. What will be the societal buying patterns in the future? How will aspects such as the circular economy around sustainability actually take place? And will they become a reality? So there's a lot of lack of clarity in these areas. But what is clear is that the transition to a lower emissions industry will be a challenge for us all. And it's also clear that we need to meet those expectations of our customers and wider society. And some of those expectations may change quicker than we think in the way in which this particular subject is moving fast in the outside world and the media. It's going to be a challenge. We do know that today's technologies alone will not be enough to meet the IMO's targets. And we do know that new solutions will be required to switch to a zero-carbon shipping. And meeting those ambitions are going to require new thinking, innovation, and collaboration. It's going to require us to work closely with governments around setting greenhouse gas emissions regulatory frameworks, market-based emissions across the value chain, use of carbon offsets, and also government support for research and development, and particularly where there are pre-commercial low-carbon technologies that we wish to deploy. The key thing that we're going to need for everyone is a collaboration at a scale which we've never seen previously. I think never seen previously, not just in shipping, but in the world. It's going to need collaboration also with other industry sectors, because there's going to be a requirement for us not only to learn from each other, but also a requirement for us to share some of these new fuels. Because it may well be that a certain other industry has a greater need for that fuel than we do in shipping. It's going to need collaboration across countries, collaboration with the IMO, and collaboration with governments. But I think that the shipping industry is gearing up to rise to this challenge and work together to develop those low-carbon shipping solutions.
Martin, what do you think in terms of figures, forecasts, and attitudes?
Well, if you read what IMO said in the statement after the decision in, was it April last year, they said 50% by 2050, and then they went on to say zero carbon as soon as possible. And I think, to be speaking, practically, we're going to have to take this one step at a time. And I mean, I was on a panel yesterday at Worcester, and everybody on the panel agreed there wouldn't be a zero-carbon ship on the water before 2030. That was the view then. And so that leaves you with a great dilemma that we're looking to get zero carbon at no cost to anybody. In other words, we're prepared to do anything except pay for it. And that, I would say, that step of actually being prepared to make some sacrifices to get zero carbon has not been taken yet as a society. And I'm a bit astonished at how quickly zero carbon has risen up the agenda. I mean, I was digging around yesterday and found a report on my computer which was on ports, on the containerization industry in 2043 by McKinsey, which was produced in 2018. And I did a word search on this quite big document for zero carbon or carbon, and only found 2 very short paragraphs that referred to carbon. And this was only 18 months ago. And I think so something since the lobby has built up very fast, and I think we're finding our feet on this thing. So I think that's a big issue, that we have to get to 2030 and find practical things to do. And the slowing down is a good one. But the one I feel most strongly about is I do believe the best way to get people to do things is to give them the information. And I think, you've got 60,000 ships at sea, and it would be enormously helpful if the owners of those ships knew exactly what their carbon footprint was every day. And not only that, but they were prepared to share that with the charterers. And this would encourage the charterers to make the decisions that we need. For after all, 40% of the trade we carry today is fossil fuels. I mean, that's true, isn't it, Graeme? It's the biggest single cargo we've got. And so are we saying that we're going to be carrying twice as much fossil fuels in 2050, or half as much. And so I think the decision process is very important. And I would say the more people that get to see carbon on anything they buy or any decision they make in business, the better the chance of getting people in the right space.
Thank you. Michael?
I'm conscious I'm sitting next to two doctors, and they're not medical doctors.
All right.
And I always, in these topics, preface my comments by saying I have an arts degree, but I have come from a meeting at Lloyd's Register, and one of the great things about this industry, especially at this time, is you learn something new every meeting you go to at LISW. And whilst I totally agree with everything Grahaeme said about collaboration, and I think Martin is having a little bit of a dig at the oil companies about their lack of collaboration to date, and maybe it needs to improve. Well, I think you did. I think the audience interpreted it that way. But I think the point is, at Lloyd's Register, I won't name names, but two of their senior people I see are now in the room, a zero-carbon shipping industry is technically available now. The technology exists for it to exist today. And so what we're talking about is the scaling up of the alternatives and all the other changes that need to make. Now, this is different, I think, from aviation. You have bigger challenges. And the great thing for shipping, and I agree totally about information, the great thing for shipping is it's good if the IMO does tighten the targets, because it will force everyone in the industry into greater collaboration and information sharing in order to make sure that the pace of this change happens quickly. And I think that's one of the things I just sense, that because it brings everyone together, from the end consumer, in some ways represented by a 16-year-old Swedish schoolgirl, to governments and the UN and everything else, the consumer and everyone in between, that there's no hiding from this. And this is the first time and the first issue where everyone in the maritime sector is allied and committed to achieve something. It includes governments, it includes finance, it includes everyone. And so I think that whilst the target will no doubt be a matter of the politics of the IMO, I think everyone who is engaged in this should not be afraid of that target being tightened.
Okay, thank you. Paris, can we have the next question up on the slide, please? So a number of the other panels have started to tinker with our topic and touched on the issues on GHG emission control and touched a little bit on technological improvement. What do you as panelists see as the challenges for owners and operators in the alternatives or supplements to fossil fuel use? And I'll start with Martin.
That's me, okay. Well, I mean, really, there's three things you can do to meet the targets. One is to move less cargo. A second is to slow down your ships and fine-tune your ships in many ways, which you can do now. And the third one is to find some form of zero-carbon energy and build a propulsion unit that's able to use it. I'd say on the first one, I mean, we've already, the ICS reckons we've already done the 2030 target. I believe that's right. We've slowed the fleet. The amount of carbon we produce has not gone up since 2008 because the fleet is effectively slow steaming. And so we're already almost at base one. The second part of slowing down is also allied to fine-tuning the ship. And it's very noticeable. One of the things I do is we have a little panel for what we Sea Trade call Intelligent Shipping Awards, and it was very noticeable this year. There's a lot more technology coming through, practical stuff, like there'll be owners here who probably bought waste heat economizers in the 80s, and these were great big, enormous pieces of kit built into the ship. They're now producing quite small, manageable waste heat economizers that you can actually fit not just to the exhaust, but you can fit to the engine cooling oil and things like that. And they just sit like a little, a little shower unit in the engine room and quite self-contained. So I think there are lots of areas for fine-tuning, which once the industry settles down, they will find these things do give a very good payoff. But the second one is the zero carbon fuel, or the third one is the zero carbon fuel. I mentioned the view on the panel, and of course hydrogen, it seems to be the accepted source there, but of course it has to be green hydrogen. It has to be hydrogen that's produced from some sort of renewable energy source, and the view in the oil industry seems to be that what is available in future of green hydrogen is going to get gobbled up by the land-based power generating sector, which is, you know, already 40% of our land-based consumption, mostly coal, so they are really high on the priority. And in addition, as we go to electric cars, they're going to have to produce green electricity for cars. So I think the question of whether the shipping and when the shipping industry can get a cost-effective source of green energy is of green hydrogen is very, you know, is up in the air, and the price of that is, you know, both the zero carbon ship and the zero carbon fuel are probably going to be a lot more expensive than the existing diesel ships, who might actually turn out, you might get a two-tier market in this. You know, you find the existing diesel ships are cheapest ships to run, and then somehow you've got to launch these really expensive and persuade Grahaeme here to pay 3 times as much freight on a time charter, preferably. Well, could you do that, Grahaeme? No, don't answer.
Grahaeme, Shell have invested in ITM Power. So what can you say about the challenges that you see in this arena?
So I see 4 major challenges. Firstly, around safety. The new fuels come with varying levels of operational hazards. Let's not forget that if we talk about, for example, the transportation of LNG, as safe as it is today, it's taken us 50 years of considerable effort and investment in design and operation to get to where we are today. Now, I'm not suggesting it will take 50 years for these other fuels, and it can be accelerated, and there's experience from us using LNG, but we should not overlook the importance of that operational experience, which may not be many years in the making. Secondly, around sustainability, and as I said earlier, and Martin has also touched upon, there's competing industries for these fuels. And it may not necessarily be our choice that we would like a particular fuel, because it could well be dictated to us by governments, and looking at this collectively, that fuel should be diverted to another industry and that we would use a different fuel. The other aspect on this is the sustainability of these. Many of the fuels are currently, the new fuels, produced from gas. If we take hydrogen, for example, much of the hydrogen today is produced from natural gas. Now, whilst there are other alternatives, and we can look at carbon capture for that carbon dioxide that's produced, still having a sustainable source of biofuels and green fuels is going to be a challenge. Secondly, around commercial viability. Again, Martin touched upon this, but the current production costs of these new fuels are 2 to 3 times their hydrocarbon-based equivalent. For example, if we take ammonia to green ammonia, and we're going to need to work hard to bring the costs down, plus also the technologies and the cost to develop the new fuels and the ships that will run on them is going to be quite an expensive piece of work, and we will need government support to be able to do that. I don't think it's a matter of picking a technology at the moment and saying it has to be hydrogen, it has to be ammonia, it has to be methanol. I think at the moment we've got to look at each of these, really study them hard, and see which of those comes through, particularly, as I say, working with the other sectors. From my perspective at the moment, there is no one of these fuels which I would see as the favourite, shall I say, because, as I say, there are issues with each of them. And then the last point, the fourth point, is around the scale of this solution. Last year, 250 million tonnes of fuel oil equivalent were delivered around the world. And if you just think of what's required, if it was hydrogen or ammonia, not just in producing this, but getting it to various parts of the world, and then being able to bunker it on ships so in large scale to be able to achieve the kind of targets. So I come back again to my theme of the day, which is around this immense amount of collaboration that we're going to need. As I mentioned earlier, collaboration amongst ourselves in shipping, but also collaboration with other industries and governments, and as I say, even at a country level.
Michael, do you want to say a little about this?
Of course, I'm not going to talk about the technical side, which I accept my colleagues have much greater expertise. I think there are 2 points I make. One is, it is important that the IMO and governments generally both help in it in terms of whatever support is needed, but also in terms of assuring a proper transition. LNG is clearly the transitional fuel to that point, but it is a fossil fuel. But there are some people who take a rather extreme view, but because it's a fossil fuel, it's bad. Gas is clearly going to be a key fuel in the energy sources of the world anyway. So I think it's important that we have a smooth transition without people attempting to sort of enforce too rigid a transition. We've seen poor regulation on ballast water and low sulfur fuel, and it's essential the IMO learns from that and therefore encourages the new technologies alongside the existing ones whilst making shipping more efficient. I think the second thing, and the question talks about the challenges for owners, and Grahaeme raises the issue of cost. If ship owners charge more for their services, they can cover the costs, and that's a demand and supply issue. And this is very important. This is the shipping industry's opportunity to make money, which it has singularly failed to do for most of the last 50 years. And this issue is the transforming issue to actually get the right type of supply in place for the right type of demand. And ultimately, that's being driven by the consumer telling the ship owners what to do. One of the topics that came up at the Lloyd's Register meeting, which was a question around whether we were ready for these new technologies, the LNG bunkering that people like Shell are investing in, and Total and others, should be the model for the infrastructure around these alternative fuels. So people should learn from the new infrastructure that is being put in place to deal with the transitional fuel and learn from that around putting in place the necessary infrastructure as you make that further transition.
Okay, next question. Up on the screen, please. What role do you see banks and others playing as part of the decarbonisation targets? And it's not going to surprise you that I'm going to turn to Michael on that one first.
Well, I can see I've got to do the sort of 2-minute version of this. First of all, to the banks that are signatories in the room, thank you for being part of this. To banks in the room that are not signatories, please send me an email so we can discuss how quickly you can become a signatory. I think the important thing to understand, and as we get closer to the implementation, which is using a regulation of the IMO around emissions data, that's all banks are going to use in terms of making calculations about their portfolios. And we're not asking for anything new, and we're taking a bit of information and working out how our portfolios are aligned. A very key issue here is this is not banks forcing something on owners. Part of the Poseidon Principles drafting committee were a number of owners and charterers, and many major owners since we launched have expressed support for it. What I think is going to be important is the financial regulators, based on the original TCFD work, have started talking about frontline implementation of, if not regulation, how are you doing your business? So not coming in and auditing you afterwards, is your portfolio green, are you doing the right sort of thing, but up front. So this becomes what we all do each day, are we doing the right thing? So a combination, and this ultimately gets back to the UN and the G20, and Mark Carney and Bloomberg led that, we are going to be expected to make the right decisions. But all we're doing here is adding the impact of climate change into the risk decisions we take. Everything remains confidential in terms of client relationships. We merely report a portfolio alignment, like many other things that banks have begun to report on environmental issues in our sustainability reports. The other key thing, and I'm not checking my emails just because I'm bored, we were a book runner on a green bond about a week ago, which was for general corporate purposes for Enel, an energy company, where the coupon will go up if they don't meet some very specific environmental targets. So you can see the capital markets are already pricing in the incentives, if you like, or the penalties to the performance of energy companies. That can happen in shipping just as easily. And I'm part, along with some other people in this room, of the Climate Bond Initiative work on shipping, which hopefully will get done by the end of the year, early next year. And that will help, I think, in terms of making sure that there is a transition so that finance acts as an incentive for people to do the right things to help finance the right type of ships, the right type of infrastructure. So the role we play is very important, and there's a historical reason, and that is that we are the primary capital providers to the industry. We have that responsibility. Banking generally has not done a very good job in the last 50 years, but particularly the last 10 years. And so because our shareholders and regulators expect us to do things in a way that we don't lose money and that is responsible for society, we can be part of this collaboration that Grahaeme and Martin both talk about. And so the financial community is very much part of that. And so we, the banks and the capital markets, will help the ship owners and the energy companies in making this important transition.
Thank you. Martin?
Well, it's a difficult question for me to answer. I haven't been in banking for a long time, but I remember one of the big issues in the brief period that I was in banking was the question of whether you were lending to the corporation, to the company, or whether you actually took into account specific ways in which they run the business. And one of the sort of big arguments was, we lent to that. In those days it was name lending, I guess. We lend to that name, and we only lend to it because they will make the right business decisions. And therefore the question of whether you are going to get your hands dirty and start to pick out some particular aspect of how they do that job is potentially, I think, going to be quite difficult for bankers. And therefore I think it's something that needs handling carefully. It's a very laudable thing to do and a good flag to raise, but in the end it's the responsibility of the board of the company to decide how to manage its decarbonisation policy, and that is part of the company's economic package, if you see what I mean. I would say, so one has to be careful to see it in perspective.
Okay. Lending is a voluntary activity.
Yes.
And Grahaeme, then on the other side of the table from the banks?
Nothing more really to add. I agree with my colleagues here in that constraints and performance clauses that we can add has the potential to help in decarbonisation.
Okay, so I'll flick on to question number 4 then, which is, if that's up on the screen, how much are data analysis, the rise of the computer and automation key to the strategies of achieving CO2 and fuel consumption reductions? So Grahaeme, I'll ask you to start on that one, please.
Yeah, I think this whole area has a very important part to play, and certainly an important part to play in as Michael was saying, doing the best we can do at this point in time, and there is a lot we can do. If I take Shell, we at the moment are taking from our ships 500 data points a second. We are analysing those in real time from anywhere in the world, and then using that to performance manage the ship. So that could be anything from the way the ship is sitting in the water. It's designed to sit in the water in a certain way, and yet often operationally it is not run that way. So running it in the way it's designed to run, routing it around storms, the ships, the same as airlines do with their aircraft. In fact, by doing that, you can get favourable currents and favourable winds which can drive the ship along. And we've got live dashboards in our office, just a few hundred metres from here, and we have a team who are performance managing those ships. And what we found is that we can reduce the fuel consumption, hence reduce the emissions of those by, at the moment, 15%. If we then add to that other technologies such as air lubrication, such as Flettner rotors, they also have the opportunity of maybe 5% each. And also what we have in place is, we've just started this with the Port of Rotterdam Pronto application, where we're looking at efficiency optimization through ports so that we don't arrive and then have to anchor but go straight into a port. Everything is ready, pilots, the jetty space, and we can discharge or load and then come out without any interruption whatsoever. And all of these things are helping very much to reduce the fuel, reduce the emissions. If we then add on to that LNG powering, energy fueling of ships, which we're seeing between 20 and 30% reduction in CO2 emissions, you can start to see that by not doing too much at the moment, we can get to some quite high percentage fuel reductions, and also with the LNG, even higher percentage carbon reductions too. And I think that we should use these technologies to, as I say, do the best that we can do, whilst we look and do the necessary research and development around the new fuels. But with all of this, as I say, the important thing is working together, is collaboration, and making sure that we learn from each other and we move forward as one industry.
Okay. Martin?
Yeah, I mean, I agree completely with everything that Grahaeme says about what you should be doing, and you know, it's a hymn sheet I've been very keen on myself. One of the I have to say, it's over the last 3 or 4 years, sort of talking, it's very difficult. I think people find it very difficult to do this stuff in practice, because the industry for the last 50 years has been operating on a basis of cost minimization. You know, the operating costs have gone down. If I actually did the calculation, and the real operating cost of a Panamax bulk carrier is half what it was 40 years ago if you take inflation into account. And if you don't take inflation into account, it's about $6,000 a day compared with $4,500 a day or something like that, way out of line with other costs. And this does not leave very much margin for actually doing this good technology. And in the few companies I've seen that have put it to work, it's very successful. Grahame's described it in Shell. I was chatting to Peter, so the chap from Chevron, about this, and was astonished that they had done everything. I mean, you couldn't ask him a question. You say, you can't do it, so yeah, we've tried that. But of course, they have big teams working on it. So I think the question I would ask is, can the industry go down this road without first of all, some change in the organization?
That's one way of telling you.